Hi guys, Greg here from physicalprice.com. This video I present to you is sponsored by bullionmoney.com.au. Be sure to log on to their website and check out their exclusive Southern Cross bullion stacker bars. Thanks for now.
Jim Rogers, CEO at Rogers Holdings, is with us on a phone line from Melbourne. Needs no introduction. Jim, thanks very much for taking out the time. Good morning. Prashant here. How do you react to the big sell-off across asset classes?
Well, the world is realizing that we have serious problems in the world. We've had our little charade in America and a charade in Europe, but now the world is realizing we've got problems and the people are starting to face reality.
You say that on the back of the one-day cut that we've got, and you say people will continue to, the realization is going to be a continuous process with a lot of asset classes continuing to go lower?
Yes, at least for a while, Prashant. You know, this is not a one-day thing. This has been building for a while. People have been worried about markets. If you look around the world, you'll see that people have been worried about stock markets anyway for a while. Commodity markets have been doing better, but at the moment everything is going down because everybody's afraid of everything.
Jim, as a global investor, somebody who's done this for a long time, we were discussing extensively earlier on the show, is what we're seeing similar to what we saw in the summer of 2008? Are we at the start of something as dramatic as that? What's your view?
I don't know if it's going to be as dramatic as that here this week or next, but certainly in the next year or two we're going to have some more terrible sell-offs because the world's in terrible trouble, Prashant. America has quadrupled its debt in the last 3 years. This overall situation in the world has gotten worse, not better.
What's the end game to it now? Especially Europe, if you're tracking that closely, would you want to talk about it?
About India or about Europe?
Let's start with what's been happening in Europe and what the ECB has been doing. They said that they're starting to buy bonds. They've not specified which ones as of now. There's speculation they might have to eventually start buying Spanish, Italian bonds. So all of that is happening in Europe. What's your view?
My view is this is all a mistake. It's making the situation worse, not better. It's making it temporarily better, but the overall situation continues to deteriorate. The problem of too much debt is not more debt. The problem of too much debt is to admit bankruptcy, admit reality, reorganize, take some losses, and start over. It's painful. It's very painful. But it's better to do that than to try to push the problem into the future when it gets worse and worse and worse.
Got that. In terms of the velocity of price falls that we're seeing, and I just want to go back to the earlier question, if we see something similar to 2008, do you think this will be a much more prolonged process? Are we going to get cuts rapidly, like 2008, in terms of the velocity of what's going to happen?
Yes, Prashant. When the final bottom, when the real panic hits, it's going to be worse than 2008. Remember, Prashant, in the last 3 years, America has quadrupled its debt. The Federal Reserve in America has tripled its balance sheet with garbage. Europe has gone deeper into debt. The overall situation has gotten worse. Governments have been trying to push the problem out into the future, but to do that, they make it temporarily better, but long term they make it worse. And so the next downturns are going to be more brutal and worse because the overall situation is much worse.
Got it. Two things which stand out about this sell-off. One is the fact that index-linked bond yields have fallen. The second is that inflation expectations have actually risen marginally. What does it mean?
Prashant, it means that governments are going to print money. Everybody knows that governments are going to print money. They're panicked. Everybody knows that the American Central Bank, the only thing it knows to do is to print money. The more money you print, the worse inflation gets.
Commodities, Jim, how do they fare in a situation like this?
In the 1970s, we had the terrible world economies, but commodities had a huge bull market. Whenever you have shortages of supply and money printing, the only way to protect yourself and to make money is to own real assets, whether it's rice or silver, own commodities. That's what I mainly own. I mainly own commodities. I mainly short stocks because the world we're going to be in is one of printing money and shortages of commodities.
A lot has been made about demand for commodities slowing down, big contraction coming. But you playing the, your main thesis is that there's going to be a big shortage sometime down the road for real hard assets.
Yes, the supply of everything is declining. But Prashant, to remind you again, in the 1970s, we had demand for everything declining. And yet we had a huge bull market in commodities because there was no supply and because people printed money. It's the same thing happening again.
Got it. Still haven't got any positions in India, Jim?
No, I'm not long India.
What about short?
I have some short positions in India, yes.
All right. Those would be stocks?
I'm short an ETF, a package of stocks.
Right, India, the Indian market.
Prashant, I'm short many emerging markets.
Right,
I'm short of an ETF that has a lot of emerging markets,
Got it.
not just India.
Got it. Thanks very much, Jim, for your time. Appreciate you joining in.
Be sure to check out bullionmoney.com.au and tell Aussie Greg sent you from physicalprice.com.